Hello Crypto Voyage family. Today, we're diving deep into a groundbreaking decision by the SEC that has the potential to reshape our understanding of NFTs and the regulatory landscape. Buckle up, as this might set a new precedent for the crypto universe. The U.S. Securities and Exchange Commission, or SEC as it's widely known, has for the first time flexed its regulatory muscles in the realm of non-fungible tokens, NFTs. This move isn't just a first, it's a potential game-changer that could influence how NFTs are marketed and sold in the future. Let's delve into the specifics. The target of this action was Impact Theory, a company operating out of Los Angeles. The SEC's contention? That the NFTs issued by Impact Theory were effectively being sold as unregistered securities, a clear violation in the eyes of federal regulators. But before any NFT enthusiasts panic, it's vital to understand that this doesn't necessarily label all NFTs as securities. The SEC's move here is more nuanced than it might appear at first glance. So, why did the SEC pick Impact Theory out of the vast ocean of NFT projects? The answer lies in the manner of their promotion. Impact Theory raked in a staggering $30 million from their NFT sales. But it wasn't the amount that raised eyebrows, it was the way these NFTs were presented. The SEC's investigation highlighted that the company's team actively marketed these NFTs to investors with promises of profits. They emphasized their tremendous value and framed the purchase as a direct investment in the success of Impact Theory's business. These promotional tactics are pivotal. In the world of securities, promising a return on investment based on the efforts of a third party, in this case, Impact Theory, is a hallmark characteristic of a security. And this is where Impact Theory apparently crossed the line. The consequences for Impact Theory have been swift and decisive. They've committed to creating a reimbursement fund for the investors and, in a further step, will destroy any remaining NFTs that they hold. This is paired with a hefty penalty of over $6.1 million to federal regulators. What does this mean for the broader NFT market? While this decision doesn't outright categorize all NFTs as securities, it does send a clear message to creators and sellers: be transparent, be honest, and be wary of over-promising potential profits. That wraps up our deep dive for today. If you appreciate these thorough analyses, give us a thumbs up and make sure to subscribe to Crypto Voyage. Your support empowers us to keep you updated with every twist and turn in the crypto cosmos.